Where are we buying? What are the price points? What are the yields? If you've ever wondered where a buyer's agent that's buying at large scale across the country is buying right now, then you're going to want to stick around because we're going to unpack that in just a second. Hey guys, welcome back. My name's Julian. I'm the head of strategy here at Ripehouse. And in today's video, it's going to be a bit more of a shorter, succinct video. I'm going to unpack where we're currently buying, what the price points are, what the yields and potentially, and also what percentages of our purchases are happening in those locations and why we may be moving from one location into another. So if you're trying to maybe do a bit of research or just get a bit of understanding, stick around and we're going to go through that in great detail now. So I think for those of you who have been following us for a while, it's been no secret that we were one of the early adopters of the Perth market, and we're pretty early also into regional parts of Queensland, even investing in Sunshine Coast, kind of 2019, 2020 period as well. So if we kind of go from top to bottom, at the moment, you can see our Metro WA purchases have really kind of fallen away. So there's a few reasons for that, really. I mean, probably starting with one is the affordability. For us here at Ripehouse, we will work with just about any budget. We can buy for as low as around about that $350 price point. The current market, sometimes we can pick up some slightly cheaper ones, but in general, about $350. How high we can go is really up to you and your budget. But what's really, I guess, reducing that for a couple of key reasons. So firstly, that area has gone through a huge growth cycle. So we've kind of entered that market. A lot of the properties were in the $350, $400 price range. We're now seeing most of that market starting with a 7, sometimes 8s, 9s. The rental returns are dropping in the 4s now. So people are either short on capacity. Most or a lot of people out there, as interest rates have risen, capacity to borrow is no longer really available to them. So that's kind of starting to eliminate the ability to purchase in that WA and Queensland metro market. Also, the yields have come down because though rents have risen, they haven't risen at the same rate as property prices. And that's mean the yield comes down, you've got higher interest rates, the ability to kind of maintain those properties from a negative gearing point, it's not really holding on. But I guess in particular, the WA metro market is very, very hard for us to get properties that not so much passing our due diligence from where does it sit on the R score, though there are less opportunities. A lot of properties have, or not a lot of properties, sorry, I should say, a lot of suburbs have fallen out of the 90 percentile in the WA market. So they might be in the 80s, which is still a decent score. However, buying at a fair market price, I'm not even talking about under market value, I'm talking about fair market price, has become quite difficult in those areas. We're seeing, I even remember when we were trying to purchase in that market kind of late December 2023 for clients that, if there was crazy amount of offers coming through where there'd be 20, 30, 40 offers for some clients and just really makes it hard to get a deal to stack up from a return on investment numbers. So again, that's really an indicator of why there's only 2%, not only in the metro, but also the outer metro area. And that's probably also an indicator where we've had clients, either we've been able to secure a property at a really good price, or potentially a client has turned around to us and said, hey, I want a high quality growth asset, but I'm only open to WA because the way we work is we'll work with clients' goals and budgets, but it's also got to align with the data. So potentially they have specified that they wanted to buy in WA. And then the Queensland metro market is somewhere where, again, it's that servicing issue, that the yield has been a reason why there's not as many purchases in there. I will say there are more higher R-score suburbs in Queensland metro than there are in the WA market at the moment. But the regional market still offers affordability from that kind of $500,000 price point. Yields have come down. You're not seeing consistent high 5s, even touching into the 6s. There was the odd property that might have got close to 7 there. They're long gone now. So there's areas that were offering 3, 4s are in the 5s, sometimes touching 6s even in those regional locations. Where I guess we can see there's been a big shift is 50% of our purchases are coming in that Victorian market, very heavily through regional Victoria. And obviously in Vic Capital, we want to get into Vic Capital, we're probably looking at a 4%, maybe a creeping a little bit above. But there's a bit of value there. Major city, fastest population growing city in the country. So potentially, or with the data showing there's going to be a bit of a bounce back in that market. Kind of always consider ourselves early adopters as well. However, yep, that capital Vic is looking strong, with the regional markets looking very, very strong from an affordability level as well. Then regional New South Wales. The problem, I guess, why we haven't seen as much of an uptake into regional New South Wales is the yields just haven't crept to. A lot of investors want to see high 4s, high 5s. However, I don't think that should be an indicator to stop you investing. There are some really strong opportunities at that mid-4 levels in the yield. And if you're buying properties that you're going to get really strong capital growth, and potentially that property, if we're comparing a property at 4.5 to say 5%, if that property's got depreciation or if it's in better condition, we could just be splitting hairs in terms of the yield. But again, it's all about making sure we fit with clients' briefs and criteria as well. And then the Tassie market. So we've talked about this before. The Tassie market is an area of interest to us, and I can only see that getting stronger as time goes on as well. So 13% of purchases that are happening in those markets. So out of respect for our clients, we haven't given away specific locations, but I think for those playing along at home, it does give you a bit of a gauge of where we're going. And like I mentioned, we're really sold on that Victorian regional market, Victoria in general. WA market, it's not completely shut yet, but again, we can see there is very minimal purchases happening in that space. So let me know what you think. Make sure if you haven't already, you're hitting like and subscribe. Leave a comment. Where are you buying at the moment? Do you agree? Do you disagree? But I hope you got some insight out of today's video, and we'll catch you guys on the next one. Bye for now.